Hi, everybody. My name is Scott Carson, and I want to thank you for watching this short little video, but a little bit more about what I do in real estate investing. I've been an active real estate investor for quite some time. My company is WeCloseNotes.com, and I am excited to share with you what we're doing here at WCN. But first, who is Scott Carson? Who's this attractive guy here in the right hand with a huge melon of a head? I am the CEO of WeCloseNotes.com. I have been an active real estate investor since 2002. I'm a previous mortgage banker for years and also a financial advisor where I had all my securities license for a while. Well, actually, not for a while, but for several years. I absolutely love what I do. I was also kind of excited to be the 2014 Note Educator of the Year. It's one of the biggest honors I've received in the industry for what I do. I have been featured all across the internet in a variety of different periodicals, from the Investor's Business Daily. Wall Street Journal's quoted me. Inc.com has had me featured on their website in the past. You may have seen me speak at a variety of different events, where there's the National Realtors Association, the Think Realty Conference, the REI Expo, or different real estate investment clubs across the country on a pretty regular basis. Like I say, I've spoken a lot on a specific topic of note investing, and I guess you could say I'm a little bit of an expert on here, but I have the most important thing here to keep in mind is I have been buying commercial and residential debt since 2007. I've been doing this over a decade, and so I am one of the premier experts in my field when it comes to buying and investing in distressed debt, whether it's residential or commercial. But what is and who is WeCloseNotes.com? What is that? Well, we're an Austin, Texas-based real estate investing, and we have an education side of what we do as well. WeCloseNotes was originated in 2010 with the sole focus of buying and selling non-performing notes, as we call them, NPNs. And when you see me talk about NPNs, that's what I mean, non-performing notes. And what we do is we deal directly with banks and hedge funds. We're not going out and posting bandit signs or mailing postcards or things like that to banks. How and where we find our deals is that we go direct. We go direct to the source on a variety of different banks and hedge funds across the country that provide us portfolios. In the last 10 years, we've purchased over $1 billion in debt. Yeah, that's billion with a B. And we've, that's been primarily for our own portfolio. And like I said before, we do have an education side to our business, and we've been honored to be teaching other real estate investors how to buy and sell and invest in non-performing notes as well. Our sole focus as a company, as I mentioned before, is buying distressed debt from banks at big discounts. This is one of the biggest things out there. We like that focus. We're not doing a variety of other things. That's our sole focus. And our goal is, when we buy this debt, is we become the bank. We have all the same rights that the bank does in foreclosing and working out with the homeowners or the operators if it's a commercial property. We have a lot of flexibility in what we can do. We prefer mortgages on underwater owner-occupied assets. We do buy some assets with some equity, but we're usually buying at such a substantial discount that we're okay. But we're buying primarily in primary and secondary markets in the states of Ohio, Michigan, Florida, North Carolina, South Carolina, Texas, Indiana, Missouri, and Kansas, just to name a few. We've bought in over 30 states in our over 10 years of experience, but primarily in today's market, that's where we're buying the most. And most of the primary and secondary markets in those states are kind of our guideline. I guess you could say our sweet spot is going to be assets on single-family homes that are valued between $50K and $250K. We're usually not going above that, because we like to stay in that really kind of beginner buyer market for the most part. We want to make sure we're fishing in a big pond. And then on the commercial side, we are looking at notes, properties that are worth at least $250,000 up to about $1 million in value. Now, the great thing, that seems to be the best sweet spot that we have found, especially on the commercial side, with banks wanting to get rid of their stuff at a discount. Same thing with the residential stuff. We like to try to stay above $50,000 value. That may be just a doghouse in California or here in Austin, but it could be a really nice property in other parts of the country, like Michigan, Indiana, some of those places. So that's kind of our sole focus sweet spot, buying stuff from the banks That kind of fits in its wheelhouse. That's where most of our stuff is. I will tell you what we are not, what we aren't. All right. We are not a wholesaler. We're not a wholesale investor where we're just putting stuff under contract and flipping it off for a flat fee. We are not a fix and flipper. We actually do not like to do rehabs. It doesn't mean we don't have that happen from time to time, but that's not our primary goal. We are not a landlord. I do not want to deal with toilets and tenants and trash outs. We are not a joker broker. We're not just taking stuff that we see online or we get from somebody else and spam it all across the internet. That is not what we aren't. I mean, that is what we aren't. We are not these things, all right? We're not a joker broker just trying to make something. That's not what we are, okay? What we are is that we are always buying for our own portfolio first and foremost. We are always buying for our own portfolio. We're always looking for a deal that we can add to our portfolio. Now, that's not saying that we may buy in bulk and move a few assets to some of our friends and colleagues, but we're always buying for our own portfolio first. And as I like to say, we're trying to turning problem properties into profitable solutions. There's a lot of distressed borrowers out there that we can pick up stuff at a price that makes sense and really create not only a win for us and the borrowers, but also a win for the banks and the hedge funds that have this on their books they're looking to get rid of. It's also, of course, a win for our investors. Now, we've got a very experienced in-house team. You've heard a little bit about me, over 10 years experience, bachelor's in business and marketing from Texas State University. And like I said, I've been an active investor for quite some time. I've got an amazing team, starting first with our VP of Operations and Events, Stephanie Goodman. Stephanie's been with me, going on about 7 years, background in short sales, and just does a tremendous job, not only an active investor herself, but does a great job running our in-house operations and our other events. We have Shannon Steedle, who is our in-house marketing manager. She handles a lot of our online marketing, our social media, does a tremendous job with that. She's a graduate of Texas A&M University. Stephanie went to Columbus State University out of Georgia. Shannon's from that other school in College Station out there. Hazel Rivera is a portfolio manager. Hazel's got quite a few years of experience in the portfolio management side of working with borrowers, working with distressed borrowers. She actually came over to us after several years of working at Madison Management, which is a servicing company. It's actually our premier and featured servicer that we use. She was actually managing our portfolio and was able to hire away, and she's been with us for some time now and does a great job of being kind of liaison between the borrowers and Madison Management and kind of reporting back to where we are on our existing portfolio. Angel Maldonado, she's in charge of our accounting and books. She comes into our office about once a month and works through everything and keeps everything, all the numbers kind of buttoned up. We also have, outside of Austin, we have Rosie Villeda. She's a marketing assistant that helps us out on special projects and other things. So we've got a pretty experienced in-house team that really help us keep that boutique feel, but also be lean, mean, and a really nice note buying machine, because we rely a lot on our vendors and our extended team of professionals that are out there. And these are just a few of our professionals that we work with, the team and the vendors that we use. Our biggest one, like I mentioned, is Madison Management out of New Jersey. They're an amazing servicer, and the servicer is the person that's sending out statements and reaching out to the borrowers and collecting payments and making sure that we're Dodd-Frank and CFPB compliant, so we're not violating any laws in the debt collection side of our business. Singer Law Group, if we've got borrowers that are a pain to deal with or being more aggressive and not wanting to pay, great. Madison will handle some of the foreclosure work out, but we prefer to send it to, as what we like to call, SEAL Team Singer. They're just an amazing group of individuals over there. And it's always nice when a law firm is working on your behalf that's contacting your borrowers. The borrowers seem to take a little bit more of a, oh crap, I really need to do something now, when they're getting phone calls or letters from our attorney's office. And Singer Law Group is out of Irvine, California. They are working in a variety of states. Singer Law Group, Daniel Singer, who runs that, has done over 60,000 foreclosures and a ton of other modifications, with previous working with Citibank and handling a lot of the Citibank services back in the day. But Daniel Singer, Matt Gillette, Joel Markovitz work over there are a phenomenal and a very key component to the success of our deals. One of the great companies that we also work with is Pro Title USA. Alex Godofsky is the owner and CEO of Pro Title USA. This is the company that's actually providing O&E reports for all the Fannie Mae note trades that you may have heard about in the news. They're the company that we use to do title reports, title updates to see what kind of things are hanging around these assets as we're getting ready to buy these. Ross Diversified Insurance, Ed and Mel Bobkis out of Orange County, California. They're our insurance carrier. We do put insurance on our assets. We'll cover a little bit more of that later, but they do this all across the country. It's nice having a one-stop shop. And they're very familiar with the note business and insuring of distressed notes, whereas not every other type of insurance company is familiar with that. We've also got some really great other friends and vendors. Laughlin Associates, a vendor that we use for a lot of our asset protection as far as entity structuring and making sure everything's on board. And then we also are a big fan of our friends Jillian Sadati and Gene Trowbridge at crowdfundinglawyers.net. They're out of Temecula, California. As we're doing and growing our business, they're a firm that we use quite a bit to bounce ideas off of, and also refer quite a bit of business to them from other investors out there looking to take their business to different levels and really raise a lot of capital. But we could not do what we do on a continued basis, not only with our in-house team, but also our team of extended professionals. And of course, we've got realtors and vendors across the country in different markets for people that we work with. Different law firms that we're using to foreclose, or different realtor teams that are helping us not only on the valuation side of when we're looking at assets, but also on the liquidation side when we take an asset back and look to sell it as well. We rely very heavily on our team. Now, our deal focus, people are curious, what's our focus? What's our kind of our deal focus? And so I'll do a quick recap. Property values, $50,000, $250,000 in value. That's on the single family residential. We avoid long foreclosure markets. And what I mean by that, we avoid really the New York, the New Jerseys when we see deals. Those areas just take way too long to foreclose. We're not opposed to a 12-month foreclosure, but really anything getting over 12 months just does not make sense for us in the long run. We prefer occupied assets with payment history. If we can buy an asset where the person is living in it, it's usually in better condition. If they've made some sort of payment attempt or some sort of payment history in the last 12 months, it's usually a good sign that we can get them back on track. And we see about a 50% modification rate or trial payment plan we can put in place when it's an occupied asset with a payment history. Now, when we're buying notes, that doesn't always work with getting it reperforming. We'll often offer up cash for keys for usually what it would cost us to foreclose. Our goal is to try to take that asset back as fast as possible if the borrower can't make payments and get rocking and rolling. So that happens about a quarter of the time. Unfortunately, we do end up foreclosing. Borrowers will just not be responsive. They will not return mail. We've had some interesting stories along the way with our vendors serving them, trying to get them to work with us. Unfortunately, foreclosure is just going to happen in this business. And we try to maintain a 30% or less foreclosure ratio. We often find that if we can take what we would be paying in foreclosure costs and offer it as a cash incentive to the borrowers, they're usually willing to do something with us. Okay. If we do have to take the asset back, we try to price that asset to sell. We're not going to try to squeeze it every dollar out of it at 100% or more. We do not want to owner finance the assets for the most part. We do not want to turn them into rentals for us. Our biggest goal, if we do have to take up an asset back, is price the asset to sell. That may require us to do a little bit of rehab to it, but we have a tendency to avoid heavy rehab, especially from a long distance. Just doesn't make sense for us. It's not the best use of our time, and often it makes more sense for us to move the asset, get the money back in, and then double down and do it again and again. So give you a brief synopsis of a lot of the assets that we're targeting and what we're looking for. Our big focus, obviously, is to get buy notes that we can buy and reperform. This is an asset in Fort Worth, Texas. We bought at roughly 48% of the unpaid balance. It was well below market value. We wish every borrower was like this. First phone call, first letter out, they responded and started reperforming on time. And the return is extremely well. They've been performing on time for 6 months straight. We expect to see another at least 6 months of performance before we look around to sell that asset off somewhere between 80 and 85% of value. And we bought it below 50%. So it's going to be a good return, not only on the cash flow for us, we choose to keep it, but also if we sell it off to a fund, a bank, or a investor looking for performing notes, it's going to be a good return and a true win-win across the board for us. I mentioned sometimes that we get assets back. This was an asset that we thought was going to be a reperforming asset. Everything that we looked at in the collateral files showed that it was occupied. Online due diligence showed that it was in clean condition. Actually, the borrower was trying to rent the property out literally 3 months before we came across this asset. We bought this asset at $44,000. It was valued about $100, $110. Bought the asset, got the collateral file from the bank. We opened it up, and there was a signed deed in lieu of foreclosure literally right there in the top of the file. So lucky for us, the hedge fund didn't do a lot of work on the collateral files. We did. We went and we're very, very happy. We filed the deed in lieu after the assignment was recorded, transferring ownership to us. Property needed very little work, a little bit of landscaping. We're able to get basically almost a full price offer at $100,000 within 60 days and get the property sold. So that was a really great win-win across the board. We'll see apartment notes as well, and sometimes apartments can be a little bit trickier, or a commercial has to be a little bit longer, to deal with because you have longer foreclosures or stuff that drag out a little bit. This is a small apartment complex that actually a hedge fund reached out to us to talk about buying, and it took us over 120 days of negotiating back and forth until we finally got the right price on this asset. Value somewhere just south of 300. We picked this up, this 8-unit in West Palm Beach, Florida, for $175. It was almost fully occupied, but we were able to take it over in receivership thanks to the court granting us receivership. And then we were then able to reach out, start collecting the rents. Once we started collecting the rents, the borrower was much more willing to work with us. They were able to walk away. And we actually sold this at the foreclosure auction 8 months later after collecting 8 months of rent for $310,000 for a nice $135,000 profit on a roughly $175,000 investment. Wish they were all like that. That's not always the case, but we see a lot of opportunity in that smaller commercial note market. It's not quite ideally for a large bank or a large fund, but there's a lot of great little base hits, single, doubles, and triples, and sometimes some home runs if you're willing to roll up your sleeves and do some due diligence on it. So great thing is we've made a lot of connections with different banks and hedge funds that send us different lists on a pretty regular basis, whether it's a one-off asset or they've got a portfolio they're looking to move. So we feel very blessed to have those type of relations that we do with. And then we're also buying different loan portfolios and pools. This is just a small snapshot of 12 assets out of a portfolio of 60 that we bought last year. These were all non-performing, but they were all occupied assets. We were very lucky. We got them at a heck of a steal of a deal, and over 65% of these have been in performance of some sort, with a nice chunk of them actually performing on time after 90 days. We've held on to it for a while. We're in the process of moving them now as reperforming assets, and we love buying portfolios because it allows for us to really have a lot more bang for our buck, but it also gives us a much better discount, a higher discount, especially because we're taking over a sizable portfolio. Now, I wish all the assets looked good. Some of them didn't look the greatest, but that's okay. We were able to evaluate those assets and write off really the ones that didn't make any sense for us, or basically give it a zero value when we end up buying the portfolio. This is really a truly win-win scenario when we're buying portfolios because it allows for the bank to get stuff off their books. It gives us the opportunity to buy something at an even sizable, larger discount, but also give us really kind of help spread the risk out across the portfolio when we're buying loans. If we have one or two assets across 10 that kind of get rough or a longer drawn out foreclosure, it's okay because we're often pretty able to and easy to reach out to the rest of the borrowers to get some sort of performance or cash or keys like we talked about. So, but this is one of the things we try to close on at least 1 to 2, maybe 3 large portfolios a year. In the last few years, we have bought quite a few assets, and these are in different areas. Like I talked about the states that we're looking for. This is not all of it's in one state, but that's okay because we have relationships and a great network of people across the country that really help us. Give you an idea of some of the markets and the places that we're buying in. Here's a kind of a quick view of a chunk of our portfolio, with the dots, the different colored dots representing different things that are going on with the asset, whether it's red for foreclosure, orange for loan mods. Blues are either brand new ones or they're in the process of deed in lieu or give us the property back. This is just a chunk of our portfolio. And then here's another portfolio of stuff that we purchased in the last 12 months. Yes, we're constantly buying assets. And this is just a great, kind of a great overview. You can see that we're buying, yes, we're buying a lot kind of east of the Mississippi if we can, but we're not afraid to go out west if the numbers make sense. Unfortunately, a lot of times the stuff further out west, California, Oregon, Washington, Arizona, Nevada, are often a little higher priced because those are very hot markets for investors in California, those areas. We like to tend to stay where we see the biggest bang for the buck and get the biggest ROI for us. All right. Now, one thing, and we've covered it a little bit here, there's a couple things that are important to keep in mind. The thing is, 6 important things to keep in mind is our number one goal is always try to rehab the borrower. We don't try to go into something, hey, we're going to foreclose and kick the borrower out immediately. That's not what we look at. And honest, to tell you the truth, early on in my note investing career, that was my main focus, and I left a lot of money sitting on the table by doing that. If we can get the borrower to rehab, if we can get them to get started back on time, this allows for us to save money on attorney fees, reduce our servicing costs. It also saves us money on the back end where we don't have to foreclose and then fix the property up to get it in a nice condition. If somebody's taking care of the property and living in the property, that's a win for us. We're not going to pay taxes, less on the foreclosure costs and less on repair costs because somebody's living in it. Like I said, we only buy first liens. We're not buying junior liens. We're not buying seconds. We're not buying lines of credit. We only buy first liens. We want to be in control of the asset. We want to be in that first lien position so that the only thing that can technically wipe us out would be taxes, but that's one of the things that we're checking during our due diligence. We're only buying below market values. We're not going to be paying close to retail. We don't do that. I say 70% or less in here because there's a few situations that will go up to 70% in faster foreclosure markets like Texas and Georgia. But for the most part, it's below 70% of current as-is market value, not ARV, not after repair value, but we're buying below current market values. Big thing, too, is we rely a lot on our vendors. They're reviewing files, and they're also pulling title for us. We always have a very clear due diligence system that we go through when we're reviewing before we pull the trigger on an asset. If an asset does not match up to snuff what we're looking for, we'll boot that asset out and move on. But we've got some very clear and specific lists that we go through, KPIs and steps that we go through when we're doing due diligence, especially in a portfolio. There's a lot of moving parts, but we're very blessed to have some amazing vendors that help make it easy for us. One thing to keep in mind, too, is that we're not the actual people reaching out to the borrowers. I think a lot of people think that we're going to be the persons out knocking on doors or making phone calls and they're not paying on time. That's not the best use of our time. It's also not the best use of our investment dollar. We rely very heavily on Madison Management, Singer Law Group, different law offices across the country to handle not only the servicing, but the borrower outreach. And if we do have to foreclose, let them handle it. It's not saying we don't get phone calls from our borrowers from time to time, trying to stay in the property, and we'll make some changes accordingly if it makes sense. But a lot of times, we've given the borrower multiple options to stay in the house, and by the time we start the foreclosure process, we've exhausted our measures of trying to keep them in the house. 6, we do place insurance on the assets, so God forbid something happens, act of God, we've got Ross covering our assets, literally, out there. And if the borrower shows that they have insurance, great, we'll remove it, but most of the time we're putting forced place insurance. And one of the beautiful things is that Ross Diversified also works very well with Madison Management. So the two work very easy. Same thing with the law office of Daniel Singer. They work very well with Madison Management. The team, as I say, it's a team because they all work together. They can pick up the phone and call. We've given permission for Madison to be communicating with the Singer Law Group and vice versa. So it's a beautiful, beautiful thing when things are working here. So what are we looking for? Why are you watching this thing tonight or today or afternoon? What are we looking for? Well, we're looking for potential funding partners. We're always looking to raise more capital as we're closing on more deals. We deal with people who have cash, savings, 401k. We do a lot with self-directed IRA accounts. Actually, Quest Trust Company out of Houston, Texas is our preferred self-directed IRA company. We do a lot with them. Very proud of actually all the education that they provide. Some of our investors are students out there as well. They're just a phenomenal company. If you don't have your accounts with them, that's fine, but we'll want to talk to see if you do need to open up some self-directed accounts to really take advantage of some of the tax advantages. We're looking for real estate investors looking for an above-average returns. It's one of the big things out there, too. Whether you're a tired landlord who doesn't want to deal anymore with toilets, tenants, and trash outs, you're an REO investor who can't find deals below 90, 95 cents on the dollar. You're tired of fighting weekend warriors at the foreclosure auctions for stuff. Fix and flippers who are tired of flipping, or in a lot of cases, flopping because the price just doesn't make sense like it used to. We're looking for a variety of people. More important, we're looking for people who want to put their certificate of disappointments, their CDs, their IRAs to work. They really want, like I said, to see an above average return for their money. We'd love to work with you. I would love to talk with you, see if you're fit for what we're doing, and go from there. And I encourage you, let's continue the conversation. I appreciate you spending a few minutes of your afternoon, your day, watching this video. And I'd love to continue the conversation for you. I'd love to discuss your goals and expectations, what you're looking for in your investments, whether it's real estate or traditional. I'd love to literally discuss that. Now, I'm going to tell you right now, not everyone is not always a fit for what we do. And I think that's a good thing. I think you want to work with people that are going to be picky about who they work with. And if we feel it's just not a fit, I'll be the first one to tell you, and we can part as friends and go from there, or maybe refer you to somebody else that might be a better fit for whatever your expectations are. The beautiful thing is we have a huge Rolodex of professionals that can help you find something that meets what your expectations and what your goals are. If you are a fit, we're glad to discuss some available opportunities with you, because we always have deals that we're working through, deals that we're buying that maybe we funded with our own funds. We're looking to arbitrage our funds out and put our money back in the market, or vice versa. We're not talking an hour long. We're usually talking like a 30-minute conversation or less. I'd encourage you, if you go to this link, scottthenoteguycarson.com, that'll take you directly to my Calendly link. And you'll be able to pick a 30-minute session that works for your schedule along with mine. And we can spend some time there discussing, like I said, this more in depth. I'm sure you're going to have some questions, and I'd be glad to answer any question that you might have during that session. As always, you can drop me an email at scott@WeCloseNotes.com, or you can send me a text message at 512-585-3810. Usually text is a better way to reach me that way. I am traveling quite a bit with different things that we're working on, either portfolios or speaking engagements. And so text or an email is often the best way. A lot of times voicemails I miss with travel, but text message or email, or schedule a direct 30 minutes with me at scottthenoteguycarson.com. But I look forward to hopefully continuing the conversation and seeing if we can't help each other create a win-win scenario for you, for me, and our borrowers. As always, you can check out WeCloseNotes.com as our main website as well. Any questions?